Welcome to Explain the Charts, where we provide data-driven insights into the most important market moves. Today is March 24th, 2026, and our focus is entirely on Litecoin, a veteran asset that is seeing a resurgence in fundamental interest. Before we look at the technical setup, we must address the massive news headlines hitting the wires. Charlie Lee, the creator of Litecoin, has officially joined LitVM as an advisor and investor, marking a new chapter for the network. This move coincides with a major smart contract initiative backed by the Litecoin Foundation and Arbitrum. Regulatory clarity has also improved significantly, with the SEC clarifying that LTC is a digital commodity. Furthermore, institutional interest is surging as the Canary Capital Litecoin ETF continues to integrate into the Nasdaq. Whale activity is also flashing bullish signals, with over 1.2 million LTC recently moved off exchanges for long-term accumulation. Bitdeer has even launched new mining hardware to increase the efficiency of the network. Despite this, some analysts warn of a possible crash to $30 if the current support floors are breached. Let us transition to the daily chart to see how this fundamental news maps onto the actual price action. The long-term view shows a coin that has faced significant pressure but is fighting to maintain its relevance. If we look back to late 2024 and throughout 2025, we can see where the massive volatility originated. In late 2024, Litecoin reached peaks near $147 before a long-term cooling phase began. However, the most interesting period occurred in October 2025, which we are zooming into now. On October 10, 2025, we saw a staggering daily candle where price swung from a high of $135 to a low near $55. This extreme volatility was directly linked to the hype and launch of the first spot Litecoin ETF. The rejection at the $130 level proved to be a major psychological and technical barrier. Since that rejection, the asset has spent months searching for a sustainable floor. Notice how the $55 level, which acted as a low during that October spike, has become a pivot point in the current market. Every time we approach this zone, the volume tends to spike as bulls and bears battle for control. The ability to hold this level in late 2025 was crucial for preventing a total collapse. We can see a pattern of lower highs throughout this period, indicating that sellers were dominant on every relief rally. The institutional accumulation reported in the news likely started in these deep value zones. Now, let us shift our attention to the more recent price action in early 2026. The daily chart reveals that Litecoin has established a very clear support floor near the $50 mark. On February 5, 2026, we saw price dip to $50.62 before a sharp 10% recovery. This $50 level is now the line in the sand for the bullish case. If we stay above 50, the narrative remains one of healthy consolidation after a long bear cycle. In early March, we saw another successful test of this zone, which led to the current climb back toward the mid-50s. Resistance is currently sitting at the $60 level, where we have seen multiple rejections over the last few weeks. The RSI is currently neutral, suggesting that the market is waiting for a catalyst to pick a definitive direction. The news regarding the LitVM mainnet launch could be exactly the trigger the market needs to break $60. A daily close above 60 would target the next major resistance at $70. Conversely, if the news fails to excite the market, a retest of the $50 support is highly likely. Let us zoom in on the hourly data to see the immediate reaction to the most recent news cycles. On the 1-hour time frame, we can observe a significant move that occurred just yesterday, March 23rd. At approximately 11 o'clock Universal Time Coordinated, Litecoin saw a rapid surge from $53.89 up to $56.16. This 3% move in a single hour was accompanied by a massive spike in trading volume. This looks like institutional buying or a large whale market order hitting the exchange. After hitting that $56 peak, the price has been consolidating in a tight flag pattern. This consolidation above the moving averages is a constructive sign for short-term traders. We are seeing the VWAP act as dynamic support throughout this minor pullback. If the hourly chart can maintain the $55 level, the probability of another leg up increases. The 1-hour chart shows that the bearish momentum from earlier in the month is finally starting to shift. Traders should watch for a breakout above yesterday's high to confirm the next move. Dropping down to the 15-minute chart, we get a micro view of how the market is absorbing the current news. The spike at 11 o'clock Universal Time coordinated on March 23rd is even more pronounced here, showing a very vertical move. Since that surge, the price has been drifting sideways, creating a high-level base. This is exactly what you want to see after a large volume impulse. It suggests that sellers are not stepping in to dump the move. The transactions count per 15-minute candle has stabilized, showing a steady interest from retail and small bots. We are currently hovering around $55.70 as we approach the end of the day. The immediate support on this time frame is $55.40. Any dip below that might lead to a full retracement of yesterday's gains. However, as long as we hold these lows, the bulls remain in the driver's seat for the short term. The correlation between the Charlie Lee advisor news and this specific spike is very high. To recap our analysis here at Explain the Charts, Litecoin is at a major crossroads. Key price levels to watch are $50 on the downside and $60 on the upside. A bullish breakout above $60 is about 60% likely if the smart contract news continues to gain traction. If we break 60, the path to $75 becomes very clear with little resistance in between. On the bearish side, a break below $50 would validate the $30 crash prediction mentioned in some reports. I would estimate the likelihood of a crash to $30 at only 20%, given the strong institutional support from the ETF. Look for sustained volume and daily closes above the 50-day moving average to confirm a trend reversal. Whale accumulation is the hidden data point that suggests the long-term outlook remains positive. Keep an eye on the LitVM mainnet launch dates, as they will likely be the next major volatility events. This video is for educational purposes only and is not financial advice. Please conduct your own thorough research before making any investment decisions in the volatile crypto market. Thank you for watching Explain the Charts, and we will see you in the next market breakdown.